Doug Fettig, who is a quite a personality. He's been a CPA for quite a long time,
Thank
30,
you.
yeah, 30 years. We'll just say that. We'll round it.
Yeah,
30
great.
years. Been doing dental for 10. And he's turned in his I'm going to call you with your tax bill conversations for the main stage at DS World, and he was the keynote speaker at Solea's last annual conference. So this guy knows how to speak. He knows how to talk to real people. So we basically wanted to have him on tonight to share some of that wisdom with you all. Quick disclaimers for the CE before I let Doug start taking it away here. You guys have been on CE webinars before, I'm sure. If you haven't, if this is your first ever CE webinar, you have to hang around to get the CE credit. There's one CE for tonight. You'll have a simple quiz and a link that goes in the chat and an email tomorrow. That way, you guys can get the CEs. You fill out a survey, it automatically sends it to your email afterwards. If you don't have that email, it's in your spam, I promise. Not yet, because you haven't attended the full 1 hour. But for everybody that's here, we appreciate you being here, spending your time with us. Time is the one thing that you can never get back. So we
Amen,
appreciate your
brother.
investment, right? All right. Nobody responded to my prompt. So I'm going to do it again. Everybody who's in the room with us here, if y'all would tell us where you're from in the chat, we'd really appreciate that. That would mean a whole bunch to us. So we know where you're calling in from. I don't know, tuning in. I don't know what the right word is for where you're zooming in from.
Got to Saratoga,
That's it.
California.
There we go. What's up,
Oh,
Bill, Saratoga, Isabella in Chicago? I know these people. Wow, this is cool. Yeah. Arella in San Diego, Sheila in Kansas City. All right.
Kansas City is an underrated city. It's a great city. Trust me.
It's an underrated city with an overrated football team. But I thought we weren't
Oh,
getting political here.
whoa.
Dang.
This one
Yeah.
is, I guess, undefeated is overrated in your book, Michael. Whatever.
Maybe we should turn off the chat before people start blowing me up here, Doug.
Well, you went there. You did. You did it.
I did. All right. Hey, I introduced you already. You've been doing this for a minute. You've hung up even though you still have your license, your day-to-day job is motivating people, helping people.
Yes.
Yeah. What do you want to say to defend yourself here before we start getting into the questions?
Well, I didn't realize we were in a court of law. So anyway, I'll take that into account. But first of all, it's so great to share the stage with you, Michael. I have known you for many years and shared the stage with you at dental events a number of times. And what you and Chad and the team do is just amazing. And I think making dentistry better and helping dentists help their patients, which is what it's all about, improving patient care. So with that caveat, thank you for having me here. As
Yeah.
Michael said, I'm a CPA by background. I'm still a licensed CPA, but right now I'm at the point in my career where I have the privilege of doing what I love, which is traveling the country, speaking to dentists all over from near and far. And I really talk to dentists with three goals in mind. My first goal is to try to change their mindset from a scarcity mindset to one of abundance. My second is to get the dentist to think like a CEO and to change their whole perspective that, I'm not just a dentist as they look down at their shoes. No, you're the CEO of a business. And the
Mhm.
third is to understand the power of technology and the changing world and how that can both improve your patient care and dramatically increase your practice, your income, and provide more work-life balance. So those are my big picture objectives as I speak to the dental community around the country.
I love the clarity, man. Yeah, I mean, we don't even have a slide for that. You're like, yep, one, two, three.
Well, I mean,
Yeah.
that's my mantra. And
Yeah.
as you probably know, Michael, schools in my day, they're busy trying to get their license, and I give them a very brief overview. I was speaking at NYU Endodontic School in January. $750,000 in student loans. They don't have time or the probably mental energy to understand the business side of dentistry. And
Right.
so it's an interesting business model where it's like go forth and be successful when they leave dental school. So
Yeah.
to the dentists that are on this call, kudos to you for taking the steps to educate yourself and try to learn those things that you did not have the time or energy to learn as you were moving up the pipeline.
Yeah. It's interesting. I actually didn't, if I thought about it, I would have timed this right. I put out a post this morning on LinkedIn that it basically compared, academic excellence versus lifelong learning. And lifelong learning comes from the athletic mindset,
Hmm.
not the academic mindset. It's constant coaching, it's constant iteration. Losing isn't failure, losing is learning so that we can show up the next day. And every game that people play, you know, whether it's the Kansas City football team or not,
Hmm.
there's a winner and a loser. Sometimes we're not going to win in the hard things that we do. But anyway, I love your three bullet points. We got to think better, know our role, and live fuller,
Uh,
essentially.
I'll give you one quick example, Michael. When I do my talks, the dentists tend to, when I ask them what their two biggest issues are, they generally say staffing and insurance, right?
Mhm.
That's what they say. So I say staffing's an issue, right? And then I ask the audience, how many of you in the audience have ever received or attended formal leadership training? And maybe 10% of the audience raises their hand. And I'm like, okay, you're the most important producer in the office. You're the CEO, but you haven't invested time and energy and resources into making yourself the best possible leader you can be. I mean, that to me is the single greatest thing that a dentist can do is invest in themselves to improve both their team and their patient care. And your group is an example of that.
Thank you, man. Yeah, I appreciate it. And we got some great folks that we get to work with. They've got that growth mindset.
Hmm.
Well, let's hop right in. Let's get into the meat and potatoes for tonight. Um, how do you avoid getting the dreaded you owe 50,000, 75,000, whatever the number is, dollars? How do you avoid that dreaded March conversation?
So first of all, I sincerely hope that nobody that's on this webinar has ever gotten that call. And that call usually starts with your CPA calling you up, and they'll say, "Hey, Michael, are you sitting down?" Which is a terrible. You never want the start of that call from your CPA or your doctor, right? Are you sitting down? And then you say, "No, but what do you got?" And they'll say it's March, and they'll go, "Hey, you owe," and I'm gonna tell you a number from a dentist in Idaho. You owe an extra $140,000 in taxes. Okay. The only way that call from your CPA is ever acceptable is if you have not given them the information they need to prepare your taxes. That's the only time that's acceptable.
Yep.
But if your CPA is working with you the way they should be, they should really meet with you twice a year before tax season, once in the summer and once in the fall. And that tax planning meeting in the fall, and I just had one with my CPA. I don't even want to do my own taxes, okay? I outsource it. Yeah. So I want to
Cobbler's
have fun.
kids.
Yes.
Yeah, no.
So we just had our tax planning meeting and we went through everything and we talked about the expenses, the write-offs, and here's what you're going to owe. Here's what I paid in estimated taxes. So I know what's coming up. If your CPA doesn't do that with you, it's really negligence on their part. You should never ever get that surprise call. It, I mean, think about it. You hire that CPA for a reason, and that reason is not only to do your taxes, but to engage with you in tax planning, which is during the year.
Yep.
So if you're getting that call, if you've gotten that call, I'm happy to. I know really good people in the CPA space, obviously, and I'm happy to refer you. But that call and that scenario from your CPA is not acceptable.
Yep. And I knew you were going to cover this because I got to see this. I mean, these are questions that people have asked. When you all registered, we allowed you to, type in what questions you have. So these are your guys' questions. Um, I knew we were coming here, and I know I've personally had that phone call. I don't want to admit
Oh,
that,
yeah.
but it's like
Well,
in March, what am I supposed to do with that?
exactly.
Pay the bill?
Yeah, and that's what this guy from Idaho did. He paid the bill, and then he said to the CPA, "You're fired," which is what he should, what you did. He had to pay the bill, right?
Yep.
I
Yep.
mean, yeah, it's unfortunate, but it happens. But it should only happen should only happen once with that particular CPA. Once burned, twice shy, right?
Yeah. Yeah. You get one. And if you screw that one up, we're not doing this again.
Yeah, and a
So
lot
I
of
mean,
times, to be honest, a CPA, a dentist might buy the practice from their dad, and they inherit their dad's CPA, who might be 68 years old, and maybe the only dentist they work with. That's a different issue of not working with an expert. That's a whole different issue. So,
right. Yeah, that makes a lot of sense. Well, I mean, so I mean, we're talking to DSM folks primarily.
Hmm.
Some of them, I see these the guys and gals on the call. Some of them are sleep only. Some are running general dentistry practices and sleep in it. Some have two separate entities. We're going to get into the separate nature of those things in a minute, but let's just say in dental sleep medicine in general, and dentistry in general, dental sleep medicine specifically, what tax write-offs do you see that are available that these folks should be taking advantage of?
Well, so big picture, of course, and any supplies that you purchase are considered a business expense. You deduct them in the year that you purchase the supplies. Now, equipment, and maybe you can help me, Michael, in terms of the types of expenditures that might be made for equipment in this realm. Are we talking big money? Are we talking social money? What are we talking here?
It does depend a little bit. There are some practices that if they're doing TMJ treatment and stuff like that, they're going to have cone beams. Uh,
Hmm.
Many of the DSM onlys that are not doing TMD treatment, they're not going to have a cone beam. They're going to do intraoral scanner, 10 to 30 grand, not the big ticket items.
Okay. So regardless of the cost of the item, whether it's 10 grand for a scanner or 100 grand for a CBCT, the beauty of our tax system is you have a choice you get to make up front with the help of your CPA.
Yep.
Through Section 179, which most of you have probably heard of, all Section 179 means is you can take the cost of that equipment purchase and you can deduct it all in the first year. Now it's optional because
Yep.
the reason why it's optional is it may not make tax sense, but if you buy that $100,000 cone beam, I always tell dentists, and this goes for any business owner, when you purchase a piece of equipment, you're not paying 100 grand for it. You discount that in your mind by 30 or 35%, whatever your basic overall tax rate is going to be. It depends on what state you're in and everything, but you can in your mind 30 to 35%. So that cone beam's not costing me 100 grand. It's costing me like 65 or 70. I may get that money back from the government, that depreciation refund back in the first year, or I may spread it out over 5 years. That's the tax planning choice, but you're going to get it back.
Right.
So when someone tells me they spent 100 grand for a cone beam, I say, no, you didn't. No, you didn't. And by the way,
Yep.
most of the time they don't write a check unless they want to. They might spread that payment out over 5 years, right?
Yep.
Okay. Okay. So you're making payments of, let's say, I don't know, $2,200 a month, depends on the interest
Mm.
rate. Okay. And your production maybe went up 15 or 20 grand a month. We'll talk about that in a little bit. But you didn't write a check. And if you depreciate all in the first year, you get a 30 or $35,000 refund check back from the government, and you barely started making the payments. So,
Yep.
so if you buy Combeam today, Michael, and the key is you have to put it in service by December 31st. So
Right.
you get a patient in the chair, you take a picture for the IRS, so you have an invoice, so it's all you can prove that it's in service, right? You
Yep.
file your taxes in February, you get that you get, and if you 179 the whole thing, you get it back before you've barely started making a payment.
Yep.
So talk about a cash flow bump.
Yep. I
Now,
mean, if I bought a cone beam, that would be a poor life choice because I'm not a
yeah,
dentist
yes,
and I don't have patience. So that would be a bad move.
it's it's
You know,
it's it's such a good deal. You almost should buy a cone beam, Mike, even if you don't need to. But I mean,
yeah.
but and just to step back a sec, all depreciation is very simple. It allows you to take the cost of a purchase of equipment and deduct it from the income you report to the IRS. So if my income for the year was 300 grand, and I go out now and purchase a $100,000 cone beam,
Mm.
I only have to report 200 grand to the IRS. So I'm less reportable income. I'm paying less in taxes. So it's that simple. It's
Yep.
it's your best as a small business owner. Depreciation is maybe your best friend, other than your DSM consultant. But otherwise, that's your best friend.
Shameless plug there, Doug. Okay, so let's move. I mean, that was an easy segue.
Sure.
So supplies are an automatic write-off because you're buying them and assumed you're using them in the same year.
Correct.
Equipment you can either spread out over the lifetime of the equipment or over several years, or you can section 179 it to have accelerated depreciation.
Correct.
Where does training CE, like if they fly to CE for an
Hmm.
event, they do
Hmm.
coaching like what we do, where do all of those types of soft, intangible, not product or supply based pieces fit? in the
So
write-off.
those are all business expenses. So you're going to be able to write those off in the year you incur them. The only the only things you can spread out if you want over 5 years are pieces of equipment that have an extended value. If I go to training, I get the value right then. So
Right.
equipment are the things that you can spread out over 5 years, pretty much big picture, not computers, that type of thing, but everything else,
Right.
supplies, training, take your team to training, all that is a business expense.
Yep.
And that's incurred and written off in the year that it happens.
Yep. So where let's play devil's advocate here. Where does this go off the rails? One, what would be a poor use of a Section 179 write-off that does not impact or invest in the business? And then second, what are the legal out of bounds lines? What do we want to make sure that we're in the middle lane? We're not outside, we're not out of
Mhm.
bounds where we're having the IRS breathe down our necks.
So I don't want to get too down the rabbit hole here, but so most people, not everybody knows that our taxes to the federal taxes are paid on a stair step level. So the first 20,000 or whatever is taxed at 10%, the next 70,000 is taxed at 12%, and it goes on and up. And now any penny you make over $693,000 is taxed at 37%. So you pay a blended tax rate.
Mm.
Nobody pays just one rate to the feds. It's a blended rate. The reason why I say that is, let's say if you decide you buy $300,000 worth of equipment this year, you go hog wild. Okay, you buy
Mm.
everything under the sun, and my income was $300,000 for the year. Theoretically, I could take that all those purchases, I could Section 179 them, and I could say, hey, I don't have any income to report this year. Isn't that great? I'm not paying a penny in taxes this year. It's actually a terrible decision. Here's why. Because by taking that all the first year, you've wasted the depreciation at the bottom of that stair step. Versus if your income is 300 or 400,000, you're up at 25 or 20 or 32%. You want to save the benefit of that depreciation for future years, so you keep chomping down at the top of that stair step. So if your CPA comes to you and says, Michael, I did a great thing here. I Section 179 everything under the sun, and you're paying zero in taxes this year. Look out. You're going to, in the next few years, because you're naked from a depreciation protection standpoint. You wasted all of it.
Yep.
So
And
zero
yeah,
is bad.
yeah, zero is bad. I mean, it's a great point, Doug, because we think of tax brackets and you think of the state tax brackets.
Yes.
You do jump all of your revenue. If it exceeds you go into the next bracket, then
Yep.
everything you made goes for that. The IRS is different, and that's the bigger chunk.
And that's another reason why your CPA needs to be sitting down with you mid-year or in the fall for tax planning. And they say, okay, Michael, you plan on buying these things that total $75,000. Based on what we think your income is be in the next few years, I think it makes the most sense to spread out that depreciation this way to maximize the benefit on the tax stair step.
Yep.
Once again, if your CPA is not engaging in that level of conversation with you, there's a problem.
Yep. Yeah. Um, all right, we got a question from Dr. Boer, and this might be a little tongue in cheek, but I'm gonna ask it anyway. How about virtual CE where we're using a dedicated computer and stay at home for the program? Like right now at 8:19 p.m. Eastern time, Dr. Boer.
Did you pay him to ask that question, Michael?
No.
Well, okay, well, it's actually an interesting question. Obviously,
Do it.
any CE is an expense, whether it's in person or online. And to that point, your computer equipment, your work from home space, there's all these rules around it, but that should all be deductible as
Yep.
part of your taxes. I get work from home space deducted on my tax return. I get a portion of my cell phone bill, a portion of my internet, all that stuff from home because I work from home as well. I
Yep.
travel. All that's deductible. So great question in that sense. You should be talking to your CPA about anything you spend in those electronic worlds, those work from home worlds. Those are all potential deductions.
Yep. Great answers, man.
Great
I,
question.
I love the really practical. This is where the rubber meets the
Oh,
road answers. I think that's what helps us as business owners, and in general, that's what we need to hear.
you asked a
So,
question about getting in trouble. One of the ways that dentists can cross a line is that they buy a really nice car. Well, hey, fine, it's a free country. You buy a really nice car, and you somehow justify writing off 100% of that car for business purposes when you live 2 miles from your office. It doesn't work. So a red
Mm,
flag is writing off a significant portion of an automobile for business use when you're not going between offices. If you only have one office, by the way, you can't deduct the mileage from your home to your primary place of business. That's not deductible.
it's your commute.
That's your commute. Thank you. So if you have just a commute and you're trying to deduct 75% of the cost of that Lamborghini that you just bought, I don't want to hit too close to home with Michael here, but that Lamborghini that you just bought, that's a red flag, kids. Okay.
And now I got a Lambo and a cone beam, neither of which I
I
can use very well in my state of California. I'll just get taxed on that stuff.
I didn't mean to spill Michael's dirty laundry. I apologize. I'm sorry. But no,
Oh
so
man.
that's an obvious red flag because
Yeah.
if someone's on the road, they're a salesperson, they're traveling here, yeah, that makes sense. But if you're just going to and from your commute, none of that's deductible.
Yeah. All right. So let's thank you for that.
Yes, you're welcome.
Let's shift some gears here. I want to same vein, but I want to make sure that we hit a couple of the other write-offs that are not necessarily dental or DSM specific. And Doug, you weren't prepped for this, so this is my ad lib from this slide. What what are some common ways for, most of the folks that we work with, they've or many of the folks I should say that we work with, they've got, kids at home. What we if you go by the, social media CPA planning, there's all kinds of things that look like gimmicks, and some of them are black and white in the tax code, others are not. Paying your kids, retirement, things like that. Can you just speak to some of the, like, we're in November, if they haven't had
Yep.
the call already, top points that they should be looking at to, maximize their deductions for the year?
To me, the two most powerful ways that a business owner can maximize deductions is through their own retirement plan and through potentially setting up a plan for their kids. And I'll explain what I mean. So let's say you're a dentist with let's say you have a 401k plan, and a 401k profit sharing is like a 401k on steroids. You can deduct about spitballing 70 grand for yourself for the year. Okay, fine. Let's say your spouse works in the practice. And is the IRS on this call? Just kidding. If your spouse, if your spouse doesn't work in the practice, they should. And then a dentist will say, "Yeah, but Doug, my spouse doesn't want to be in the practice 40 hours a week." They don't have to be. They can make the
Mhm.
Costco runs. They can work on payroll. They can work on the website. They can do all these things. You write up a job description. You pay them a reasonable hourly rate. You can't pay them $100 an hour for filing papers.
Right.
You pay them a reasonable rate. At the end of the year, let's say you've paid your spouse 40 grand a year to work part-time in the practice. If you have a 401k profit sharing plan, you can push in at about 29.5, almost $30,000 into their retirement plan. So they've worked for you, and you can take a major chunk of that money and put it right into a retirement plan and not pay taxes on it until they withdraw it in retirement.
Mhm.
It's incredible.
Yeah.
And the only way this doesn't work is if your spouse works for another employer and they have a separate 401k plan. If they don't, they can work for you part time, and you can take, and let's say you paid them 20 grand for the year, all of that money, if you have the right retirement plan, and put it into that tax save. It's massive.
Yep.
Okay, your kids. I'm going to give you a real life example in a minute. So, do people know what a Roth is? That's the money you save after tax. It's a retirement plan after tax. You pay taxes, it goes in. Let's say your kid is 16 years old and they worked at Chipotle for the summer and made $2,000. You can set up a Roth for them. I think the max is like 7 grand a year now. Anybody can put the money into the Roth. You can put it in. The kids, you can match it. A grandparent can put it in as long as it's been earned in the eyes of the IRS. Anybody can put it in. Okay. So my boys, when they were teenagers, they did their various jobs, and I set up a matching program. They put $100, I'd put in $100, et cetera, et cetera. Here's the kicker. So your kid is 12 years old. They're doing legit work for your job. They're doing landscaping. Maybe they're doing vacuuming,
Meaning.
janitorial work. Sure. Okay. You can set up a Roth for them at the age of 12. You start to put that money in of time and compound returns. It's going to build for decades before the
Mhm.
50 years before they retire.
And the
I'll take you,
taxes are already taken out when they're 12.
and which are no taxes. So you're right.
Right.
When they have no income, basically that's their only income. Taxes are rounded or zero. I'll give you an
Yep.
even better example. My granddaughter Remy, who's now 3 years old, she appears on my website, and I use her picture in my presentation. So I talked to my CPA. You can pay a modeling fee if your dental if your family's on your dental website, you can pay them a modeling fee. So my CPA said, yeah, $500 is reasonable. So I paid my granddaughter Remy $500 at the age of 2. My son set up a Roth IRA for her and put it into the Roth. It's all into like the S&P 500. No,
Mm.
no fees. If she never touches it, I have to look it up. I can't remember what it's going to grow to when she's 65, $100,000 because she put it in when she's 2 years old, right? It's amazing. So
Yep.
those two ways,
Mm.
transferring money into retirement for your spouse and setting up a Roth for your kids or your grandkids, are probably the best, most tax efficient, legal ways to
Yep.
transfer wealth.
Yep.
Sorry, I get on a soapbox, so I get so excited about
That's all right. I don't have grandkids yet, but the
it.
$500 from age 2 to 65 turning into 100 grand is bordering on a life insurance sales conversation here, Doug. um, Doug does not sell whole life
No,
policies.
no, no.
This is not ever. Um, okay, so let's shift gears. Okay, we're not talking write-offs anymore. We're talking corporate structure. You've been around the block. You've seen dentists that open practices, multiple offices. Our lane obviously is very much sleep only or DSM only related. Um, in your mind, from what you've seen, what's the best corporate structure for a sleep only or a dental sleep medicine only practice?
Can I jump in? I actually went to the chat and saw a question we can address real quick,
Yeah,
if you don't
sure.
mind. The question was, home office used to be an audit trigger. Is that still the case since 2020? Um, Home
No,
office deductions.
real office is the trigger now. I'm sorry. Go
Yeah,
ahead.
I mean, home office has become very, very, very common since 2020. And in fact, there are two different ways to do a home office deduction. One is to do kind of a standard amount based on an estimated square footage, and it's kind of a big picture, one of these things, which is cool with the IRS. The other is a very detailed one if you want to try to maximize the deduction. If your CPA is taking, let's call it the standard home office deduction, and it's a reasonable square footage, it is not an auto trigger at all. I mean, as Michael touched on, since 2020, since COVID, it's probably more common than not that professionals have a home office deduction. So, okay, I want to throw that in there.
Yeah. If your real office is 2 minutes down the road from your home office, I don't know. My CPA was like, hey, you live literally 6 minutes from your actual office. Do you have a home office? Do you have four walls that we can take pictures of? Like, yes.
Yep,
Okay, cool.
yep,
And that
yep,
works.
yep,
Do you work there? We got to check some boxes. Bill, great question though. Thank you for
yep,
asking that because
yep,
the last thing that we want to do is take a good write off for $50.
yeah,
And now it's an audit trigger that's going to cost
yeah.
us hours of our time. That's ridiculous.
Oh,
Yeah.
I should throw in a disclaimer, Michael. All this stuff we're discussing, you obviously want to run by your CPA.
Yes.
This is not specific to anyone's practice. This is, yeah. So, best
It should
corporate
not be
structure.
considered legal or financial advice.
Past results
Just
should not be considered something about future results. Whatever, you get it, right?
past results, not indicator of future.
Yeah, yeah. There you go. Um,
Fantastic. Okay, back to the question of corporate structure.
can,
What do
can
you
I
think?
can I start with a quick story first? You know, I love
Yeah,
my stories. Okay, so I'm doing a talk down in Nashville. You've been to Nashville, Michael?
I have.
Broadway Street, it's like Vegas for music. It's almost too much
Hmm.
for me. Four stories, live music coming out of every story. You get it, right?
Yes.
So at the break, a dentist comes up to me and he says, Doug, I got out of dental school, and my dad said, come join my practice, and after a couple of years, I'll make you a partner. Cool story, right? Yeah.
Hmm.
After a couple of years, I'll make you a partner. Then he says to me, 12 years later, 12 years later, I had to give my dad an ultimatum. Either you make me a partner or I'm walking. His dad strung him along for 12 years, and there were no legal or written agreements because it was all in the family. So my advice to anybody listening, or to anybody's maybe child who's going to get into the business, these are business transactions. You have to have legal, tight written agreements. If you're going to go through the buy or sell of a practice, for heaven's sakes, don't hire your nephew's roommate who just passed the bar to be your attorney so you can save $200 on. Come on, people do that, Michael. It's like, no, guys, you want to find someone good. So that's my little caveat on do not, do not, what's the phrase? Do not come into a knife fight with a butter knife, or I don't know, something like that. You get it.
Gunfight with a knife.
That's it. That's
Your
it.
stories are on point. We got to work on your analogies, friend. We got to do that better.
um, so yes,
Yeah.
I'm a firm believer in that. Okay, so corporate structure and big picture, things have changed. Many years ago, if there's older people like me out there, they remember C corps. The vast majority of dental business structures are now S corps, and there's various tax beneficiary reasons or benefit reasons for that. Once again, even within an S corp, there's different ways to structure things, and there's different ways to structure distributions of income and everything else. So you're going to want to sit down with your tax attorney, your CPA, and work these structures out. But it really isn't overly complicated. It really isn't. Um, and that's kind of the long and short. You don't want to go too detailed in that question because it's always practice specific. Does that make sense?
Yeah, absolutely. I'll add a little bit more. I mean, we coach practices on this as a company within our pivot program. So this is a kind of a well paved path for myself. Within a corporate structure, obviously, just like what Doug said, you've got mostly S corps, which are professional corporations because you're a licensed dentist, so you can only sell to another licensed professional because of the type of business that you're in. Within the DSM space, you've got a little bit of latitude here. And going into, if you're setting up a separate business, it is really helpful to understand what's your exit. That sounds like we're, Silicon Valley or, in your MBA program, you only ever start a business with an exit plan. Yes, but let's start with the end in mind. If you're a dentist and you have a non-licensed child who wants to run your durable medical equipment company, they want to run a DSM office, but they can't own that office if it's a dental office, if it's a professional corporation. They can, in fact, own a durable medical equipment company.
Oh,
Does not require a license to own a sleep center, a DME company. Those have separate licensure. Like a DME company has to have a home medical device retailer's license through the state that it's in. All of those requirements are different. So if your goal in your exit is to sell to a non-licensed person because that's what you've already mentally set up, there's going to be some limitations on that business. DME companies cannot bill office visits. Only going to be able to have certain types of contracts, but you're starting with the end in mind. In general, unless you have that type of a goal, you'd want to file exactly what Doug said, professional S corp or a PLLC, depending on the state that you're in and the guidelines. Again, talk to your CPA, your tax attorney. You can figure that part out.
That's great knowledge. I did not know that in that world you can, I don't want to say avoid some of the requirements of dentist to dentist sales, but it sounds like you have some greater latitude, but also some pros and cons.
Absolutely pros and cons. And that's why, I mean, I'm not an attorney or a CPA. You are a CPA. This is not, please go forth and do this advice. It's general knowledge that's understood. DME companies are not required to be owned by a licensed individual. Neither are sleep centers. So if you're positioning yourself in that way, you could do that. The other thing is you could have a P or an S corp with a professional designation. And instead of selling the entire entity, unless it has contracts associated with the tax ID, you could sell the assets. That's an asset purchase agreement. So there's all kinds of ways to, skin the cat. I don't know why we've been skinning cats in analogies.
It's terrible. By the way, your description reminded me of another. It should be a commonly known tax break or a tax benefit, but if you own the real estate that you practice in, that is another way you can set up a separate corporation. There's tax benefits to that, and if you choose to retire and still have that real estate, it's another cash flow that you have on the back end. So So owning the real estate or the office that you practice in versus leasing it, there's pros and cons. But one of the pros is that it gives you some tax advantages, and it potentially provides you with another income stream in retirement.
Yep. Yep. That's great. Actually, that's I've got a slide here for that.
Whoa.
That I'll get to it here in a second. Let me share the screen. This is actually one that somebody asked us in the chat. So you're on point with this, Doug. All right. Is it better to take a loss on my new company that doesn't have income, i.e., put the expenses for the new sleep company or something like that? Or should I put the startup expenses on my current dental practice to reduce the tax burden with that one?
That kind of touches on what we talked about a little bit earlier with the tax stair step
Mhm.
and trying to determine if you have some flexibility in when to take the loss or when to record the expenses, what time is going to be the most beneficial based on where you are in that tax stair step and giving you the maximum amount of benefit of that depreciation or of that loss. So there is no one answer for this other than it might be to take it all up front. It might be to try to delay it if you can. It's all about tax planning and minimizing your tax burden.
Yeah. And I think it's important to in understand. I think what I'm hearing in this question that was asked of us, when you're talking about the depreciation and all of that, Doug, you've got some options of experiencing it in this calendar year or across the multiple years, 5-year timeline.
Mm-hmm. Mm-hmm.
If we're talking about supplies, software, training, I mean, those expenses are going to be experienced in the year that you make them.
Yep.
The
Yep.
question of which company it goes under, does that actually matter if it's an S corp and an S corp or an LLC? It all translates to you as the person. Are there benefits of which company that goes under?
I'm not gonna. That's down a rabbit hole. I probably don't feel comfortable
Okay.
pontificating on. So I would once again
Yeah.
talk to your CPA, and that gets into some interesting scenarios, and there may be some benefits, but they would certainly be able to advise you on that.
Yeah. Don't put the cone beam expense on your
Oh,
rental property company.
one more quick thing on the depreciation. If you can depreciate it all up front, or you can depreciate as much of that cone beam in the first year as you choose to. The remaining balance can only be spread out over the last 4 years, years 2 through 5. Once you make that decision
Yep.
of 50 grand in year one and the rest, you can never change it. So be very sure about the amount you want to take in year one because you can't go back and adjust it. You can't make a correction.
Mhm.
It's etched in stone.
Yeah. So what I guess I'll just ask a tangent question on that. So we're talking about write-offs and telling your CPA, what are they calling them every time they make a purchase? How do we report these write-offs appropriately to the CPA?
Well,
Obviously that
okay.
tax planning conversation, but in between those conversations, what's the best method of communication that you've seen for these types of things?
Okay. So I'm going to try not to be facetious here. Okay. So hopefully, a lot of people are using QuickBooks Online, for example. I'm not plugging, they're using an online software system.
Yep.
Okay. And in this day and age, your CPA can be connected right into my CPA is connected into my QuickBooks Online. Okay. Whether you use Zero, whether you use something else, that's the same concept. So if you or your office manager, someone is recording these things into your accounting system, your CPA is aware of them real time. There is no need to tell them that I bought a comb. You're still going to, it's a big purchase, but you put it in the system and they are able to draw this information out as they're doing their ongoing tax planning. So it's a whole different process than having a quarterly meeting with your CPA in the shoebox full of receipts. It's the exact opposite of that, right? It's
Yep.
it's real-time information. You put in the system, they're able to view it, they're able to slice and dice the information, and that allows them also to see what's happening and to if they're doing their job right, they're using benchmarks. So it's like, hey, Michael, I noticed your lab expense is out of whack. Did you miscode something or what's going on here? So by having that online view of both sides, they can see stuff as you see it, and they should be able to see red flags if there are any as they pop up.
Yep.
But if you don't have an online system, you need to, you tie a piece of and you tie an invoice around the carrier pigeon and you mail it over to your. I'm sorry, that was bad. That was mean. I'm
That's for
sorry.
QuickBooks Desktop.
That's
No,
at
I'm
your
just kidding.
desktop.
No, I'm just kidding. Oh man. Yeah, we're gonna get into it.
Yeah, we're gonna
Okay,
get.
so I'm going to poke the bear here. You are
Okay.
famous for talking about this on the main stage from a
Yep.
lot of places. Most people go to their CPA for financial advice. It makes sense. You're the one with a
Yep.
financial degree.
Yep.
What happens when
So,
they say you can't afford it when you
so
have this
some,
big idea?
yeah, someone goes to digital training or they go to DSM training and they come back and they say their CPA, I'm fired up. I'm going to change the world and change my practice, and I'm going to spend $100,000 on equipment. I need to make this investment. It's not an expense. I need to make this investment in order to grow my practice and improve care. And the first thing the CPA says, you barely stop talking. It's not in the budget. Can't afford it. Okay. If your CPA says it's not in the budget, it tells me two things. It tells me you have a CPA with a scarcity mindset instead of an abundant mindset. And I'm going to be really upfront here. It tells me you have the wrong CPA. And here's why. The budget is nothing more than an estimate of the revenue and expenses for the coming year, for example, right? We think this much is going to come in, this much go out, we're going to make this much money. If I come to you, Michael, and say, I want to buy a cone beam for 100K because I think it's going to help my practice, if you say it's not in the budget, that's the wrong answer. The right answer is return on investment. Okay, Doug, if we invest this 100K and we think it's going to generate $200,000 in increased production, easy math, that for me, that's 100% ROI. Okay, the first question your CPA should ask you is, what's it going to cost? What are the monthly payments? What do you think the increase in production is going to be? What's the ROI? Those those are the questions your CPA needs to be asking you. And by the way, there's other ways to calculate ROI than just I paid 100, I made 200. Let's say it allows you to do more dentistry or more sleep medicine faster. Okay, you can build more production in less time. That's also return on investment. Let's say you have a patient who is an hourly worker. Okay, if they clock out to come see you, it costs them money to come see you, right? Some of us like, hey, I'm going to go to the dentist. Okay, have a good afternoon, Doug. Hope traffic's not too bad. See you in the morning. Some people clock out. If you use technology and you're able to reduce the number of visits they have from 6 to 3 or 4 to 2 or 3 to 1, you've just put time and ROI back in your patient's pocket as well. So I always tell dentists, if you're able to do something quicker because of technology, not bragging about it, but let your patient know I'm able to do this in one visit because I invested in this equipment and I care about you as a patient. Promote what you've invested in and how it's benefiting your patient.
Yeah. And folks, I just we've said cone beam so many times on this webinar. I do want to make a point here. We're a coaching company. Doug's a CPA influencer. None of us are paid by cone beam companies, and we don't
Exactly.
have a cone beam sponsor here.
Uh,
So just
yeah,
just to understand, like this isn't to promote equipment. It's really to promote a business mindset.
yeah.
And Doug, if you give me just I want a little latitude here as the coach in me is like, I want to take what you said. Please don't leave. But what you just said is it's not just the details. It's not just the answer of is it in the budget or what's the ROI. Those can be standard questions. But what Doug's talking about is a CPA that has a business mindset that helps you understand the financial part of investing in the business. If you just want to buy a shiny piece of equipment because you can section 179 that sucker and you really want that thing and it's not going to impact production and it doesn't help you do anything faster, you just like it. That's kind of your version, the dental version of a Lambo.
Mm-hmm.
So we got to be careful with
Mm-hmm.
that. We're not just promoting equipment purchasing or over purchasing because it feels good. What he's saying is the CPA partners with you as a business owner, as the CEO in your company, with the right mindset of investment in the business for its growth.
Yeah, and I'm really glad you mentioned the fact that so I speak all over the country for many different companies, and I tell them I'm a free agent. I'm agnostic in one sense. I'm trying to promote a vision of I see there's two main ways that dentists can grow their practice or sleep practitioners. One is to in the dental space drill and fill, and I meet some young dentists who try to work 6 days a week. Okay, that's sustainable for I don't know 3 months, 6 months before they kill themselves, right?
Right.
Or the other way is to leverage technology. Now, once you decide to leverage technology, whether it's the technology that company A is selling versus company B, that's not my deal. I'm not a technician. I'm a free agent. I'm trying to change your mindset, and then it's up to people in the industry to explain why this piece of technology is better, or the pros and cons versus this other piece of technology. So thank you for that caveat.
Yeah, absolutely, man. I want to make sure,
Yeah,
there's
yeah,
not
oh
like
yeah.
there's not some subliminal message where you're going to get this magical link to buy a cone beam
Well,
after
and
tonight.
CBCT is used a lot because you can throw out a nice round number of 100 grand. Okay, so it's just easy math. Okay, and that's another
Yep.
reason why that's used a lot as an example.
Yep.
Thank
It
you.
it it maths well.
That's
Yeah. All right. So you've talked a lot about CPAs.
Mhm.
We actually had somebody ask this. Where can I find a CPA that's experienced with dental, or they put and, but I was like and or
Mhm.
dental sleep
Mhm.
medicine. You know, dental specific DSM might be a little bit of a stretch, but it's really helpful when people have the same types of clients and have the same conversations. So where would they find them? What have you seen when you were a CPA that was really helpful for your clients?
So I'm gonna big picture it back into that question for a sec. When I do my talks, I put up a wheel of service on the different things you want to surround yourself with to be successful. So let's say you're the CEO of Walmart, right? You hire a CFO, you hire a VP of technology, you hire a head of procurement, you hire a director of HR. You get it, right?
Yep.
If you're the CEO of a small dental practice or a small DSM practice, you can't hire those. You have to outsource those positions. And finding an expert, a CPA who understands your world just like an attorney or anybody else, is critical, because they understand the benchmarks, they understand where you should be compared to your peers, and then someone will say, "Yeah, but Doug, a specialist a specialist costs money." I'm like, "Well, yeah, they have to eat, right? Their time is valuable. If your specialist isn't bringing in more in value than you're paying them, you're using the wrong specialist." It's
Yep.
that simple. It really is, because the way people grow is by collaborating and having an abundant mindset with other people. And so I'm a firm believer in, whether it's a CP or anything else, finding those people. And there's obvious ways you can let your fingers do the walking through Google. There's a dental CPA organization. And I'm not just saying, there's just people like myself. I have 2/3 different CPA groups that I know are outstanding, that I've referred people to and heard good things back. You can use me as a resource, for example. But you owe it to yourself, I think. And I'll give you a quick example. I referred a dentist into a CPA group that I love. They do a free, let's call it a free financial report card. They do an overview of your practice. It's no charge out of the gate,
Mhm.
to see if there's a need there. They came back to this dentist and they said, "You know what? Your CPA is doing a great job. You don't need us." And right then I knew these guys were legit, because they weren't
Mhm.
just trying to blow some smoke to get a client.
Right.
So, I
Yep.
mean, if you inherited your dad's CPA and he's the only dentist you work with, I just struggle to believe that they're going to know the ins and outs of the industry in a way that's going to maximize the value you can get from that expert.
Yep. Yep. Okay. Um, let's go on that same vein. What are the top three-ish, three questions or a few more if you want to add them? What are the top questions that you would recommend any of these folks ask a new CPA when they're vetting a new CPA or a new firm? What should they ask? What should they be looking for?
I guess one question I ask them is very directly, what makes you and your firm different and special enough that I should give you my business? Why should I choose you to be one of my most important advisors? And then listen and see what they say. I mean, I think that's a legitimate question.
Yep.
I think another question is, are you um, how many other how many other dentists do you, or in my field, do you work with? Would you be comfortable if I ask them about what their experience with you? Could I have some referrals from your client base, please, that I can talk to?
Yep.
I think that's another legitimate question. And if they kind of hesitate at either one of those, to me, that's a semi red flag.
Mhm. I love the direct questions. I'm a very direct personality, and I've got some friends on this call that are very direct. So my friends from Jersey or
Yeah.
else, yeah. For those that are not as direct,
What West
what would you?
Coasters?
Yeah, what I mean, are there any red flags that you would say are major concerns where you would either bail on a current CPA or you would absolutely walk out the door if it was a new relationship?
Well, and I don't want to bang the drum too much here, but if you, especially if it's a new relationship with a CPA, they should be maximizing the use of technology to both to understand your business, to do your taxes more efficiently. So technology is a key indicator to me. If someone has got the green eye shade on and they have a 16 column Excel spreadsheet that they do all the work on, I'm sorry, we're not going back in time 30 years here, kids. So technology, and they should be able to promote how they use technology to do your taxes more efficiently. And a lot of them are already baking in artificial intelligence.
Mm,
So look for benchmarking, look for trends. So you want somebody, in my opinion, who's on the cutting edge of technology. That to
mhm.
me is a red flag if they're not.
Got it. So QuickBooks Online.
Well, I don't work for QuickBooks. That's just that
I know, I know.
they're the King Kong of business software. We know that,
Yeah,
right?
yeah,
Yeah.
yeah. But no, I mean, it's funny. I want me personally, in any advisor that I work with, I want a balance or any software, any tool, anything. I want the right balance of AI and HI. I want artificial intelligence and human intelligence.
Well, and that's maybe another when you touch on red flags.
Yeah.
You want a CPA. Okay, I didn't touch on this earlier, so I'll do it quickly. If you have a discussion with your CPA and you walk out of the room or turn off your Zoom call, and your eyes are rolled in the back of your head because they didn't understand what you don't understand what they said to you. No, if you don't understand what your CPA or your advisor says to you, explain to them, I know you know more than I do because that's why I hired you. I need you to explain this. Draw me a picture, put it in layperson's terms because I don't fully understand. You just did a rant about goodwill and you lost me, bro.
Hmm.
So make your CPA or your advisor talk to you in a way that you understand because you're paying them.
Yep.
Their job is to explain it to you in a way that you understand. So don't ever walk out of a meeting with your eyes rolled in the back of your head, not knowing what they said. Okay.
Yep. So we got a question in the chat. What other specifically accounting technology are you thinking of when you were talking about they have technology and they're using it?
So some of the stuff's pretty basic in terms of protected portals where you can transfer all the information. Once you put the information in, they should be able to connect to your QBO, your QuickBooks Online, whatever platform you use. They should be able to create really spur of the moment financial statements for you based on the information that they have. So it should be a seamless interaction between your information and their information. That's really the biggest key.
Yep.
Now, the other technology like around artificial intelligence and benchmarking, they should have red flags in place. So if your expenses or something is outside of a certain bell curve, whether it's good or bad, you get an alert. So what happened in this category and what do we need to look at here? So that's another obvious one. You need to have red flag technology.
Are there specific softwares that you have in mind, or is that kind of, I don't know that
I
space.
yeah, I don't
Yeah.
have specifics. I can certainly refer you to some folks that would have some specialty knowledge in there that
Okay.
use this stuff all the time.
Cool. And
Thanks,
I know,
Bill.
yeah, good job, Bill. Cracking the whip here, making sure we're keeping us honest. So you mentioned multiple firms, and I know I'm probably going to get 20 emails after this, asking what those. Will you just say them? Um, pretty please.
Do you want me to say them?
You're welcome to say them.
Oh, oh,
Anybody that you, as the speaker, because I trust you, it doesn't matter if we vetted them or not. You have. So,
well,
in your
okay.
opinion, who would you
So
recommend people
so
vet?
here's two. One is Crossroads Tax Advisors. They're they're based out of Indianapolis, but they have approximately 100 dental clients around the country. And if you want your CPA to be down the street for a cup of coffee, that's a different story. But nowadays, especially for younger dentists or sleep practice, it's like as long as everything's virtual.
Mm,
Crossroads Tax Advisors. The other is a firm headed by Carly Carlson, who I used to work at the same CPA firm with. In fact, she shared the main stage with me at DS World. Her group is called We Team CPAs. Carly Carlson. She and her team are phenomenal. She works with dentists, physicians, and others. Both of these groups provide absolute white glove customer service. Your perspective and your needs come first. They're going to treat you with kid gloves, and I would not refer anybody who I didn't feel that was the case. So those are two that I'm comfortable mentioning out loud.
Yeah. Well, please don't mention any others silently. Yeah. And I will say too, at least I'll say at least for me as a business, I'm not a dentist. Obviously, I'm not buying a cone beam or a Lambo for that matter. But and having a bookkeeper, there's bookkeepers and then there's bookkeepers.
Yes,
And we've had both. And that is not your CPA necessarily. Some CPA firms, the ones that Doug mentioned, they may have bookkeepers
they
on staff.
do. They do.
Yeah.
Yeah.
Having somebody, I mean, we have somebody now that's an independent bookkeeper, works in tandem with our CPA. And the way that we transact revenue online on different sites, for us, it's education and flyers and coaching. And
Hmm.
that's just our business. But I mean, think about it. The cash that the insurance payments, the AR, all the details that you have, to have someone that really understands the way that your business breathes and lives, that's
Yep.
a lot. That's your bookkeeper. And yeah, I can't
Yep.
say enough about ours. So
That's us because it's like a legal and a paralegal. You want to have a lot of the work done by the bookkeeper versus the CPA.
yeah,
And when you have that peace of mind that you know that that's getting done properly, that it's so much easier to put the head on the pillow at night when you're running your own business. So much easier.
yeah, yeah. So I'll do a shameless plug. We are not employed by her or take any fees from her, but Trish Venata at Bridger Bookkeeping, she's lights out, outstanding bookkeeper. So anyway, and she's not associated with a firm; it's her own deal. So you guys can reach out to her if you want to. I appreciate you, man. Any parting words that you have as somebody who's done this for a long time for these folks?
Use experts, approach life with an abundant mindset, and technology is your friend. It'll change your life.
That was very succinct.
You're waiting for
Love it.
more. That's it.
Love it. No, it's fantastic. Thanks, guys, for tuning in. We appreciate you, like we said, and have a great night. We'll see you around.
Thanks.
Bye.
Bye.